Hello, I'm Mary Kurzweil with the CattleFax Closing Bell. This week's Closing Bell is brought to you by Purina Cattle. The USDA released the July WASDE report, updating the agriculture global supply and demand estimates. The biggest change in this report was the corn estimates. In old crop corn, there were no big changes on the supply side, but demand increased by 150 million bushels, with both a 75 million bushel increase in feed and residuals and a 75 million bushel increase in exports. This moved stocks to use 1.1% lower to go to 12.6%, which is the lowest it has been for this crop year. On the new crop side, the overall stocks to use estimate only changed by 0.1% from the June report, declining to 14.1%. While this is not a big change, the expectation was that stocks to use would move significantly higher and approach 15%. The expectation for more corn was due to an increase in planted corn acres in the June acreage report, increasing just over 1.4 million acres to go to 91.5 million acres total. While the larger acreage estimate was in the report, it was offset by increased demand expectations, with another 75 million bushels increase in feed and residuals and a 25 million bushel increase in exports. There were no changes to yield expectations, which are still at 181 bushels per acre, but historically the USDA does not adjust yield estimates until August and later, so this was expected. Current crop conditions would indicate minimal risk to yield, and a large crop is still expected for this year, but that will need to be monitored with some flooding in the northern Corn Belt in recent weeks. 181 bushels per acre would be a record large corn yield, so even with good conditions, it would be hard to outperform these estimates by a lot. Stronger demand and decreased stocks to use indicates that corn prices could have some upside risk and that further downside should be limited. The soybean WASDE estimates were right in line with expectations, with no big changes to old crop supply, demand, or stocks to use numbers. On the new crop side, there were a few less acres and a small decline to beginning stocks, which moved stocks to use about 0.5% lower to 10% for the 2024-2025 crop year. This is still 1.6% above year ago and should keep supply at relatively comfortable levels. Turning to this week's markets, fed cattle traded at mostly 188 in the south, which is $2 lower than last week. The north traded mostly steady on the week at 198, keeping the north-south spread wide. The feeder cattle index moved significantly higher this week, increasing $6.45 from last Friday to go to 261.53 through Thursday this week. The large Superior Week in the Rockies sale took place this week, and stout prices as a whole were seen for calves and feeders at all weight classes. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.